This is rapid revision on the 2017 Ordinary Level Cash Flow Statement question. On the left hand side of your screen you will see the question, and on the right hand side you will see the solution. In the question itself we are provided with a profit and loss extract for the year ended the 31st of 12th 2016 along with a balance sheet. In part A of the question we have to do a reconciliation of operating profit to net cash inflow from operating activities. Our first entry was operating profit, and that came from our profit and loss extract, which was €70,000. Our next entry was depreciation, so we have to go to our balance sheet, and in 2015 you can see our depreciation was €85,000, and in 2016 was €110,000. So you can see that there was an increase in depreciation of €25,000 when I subtracted those two figures. Now you can see that figure is a plus 25,000. The reason being, if depreciation increases, then you always add. Our next entry is stock. So we go to our balance sheet. Under current assets, you see stock. Stock in 2015 was €37,000, and in 2016 was €43,000. So you can see there was an increase in stock of €6,000. Now you will notice that stock figure, it's a minus €6,000. The reason being is your stock increased by €6,000, so you obviously paid for that stock. It was an outflow of cash, so it was a minus 6,000. Our next entry is debtors. So we go to our balance sheet, current assets. In 2015, debtors were €26,000. And in 2016 there were €29,000. So again, you can see debtors have increased from 26 to €29,000. Debtors are obviously people who owe us money, so if debtors increase, it's a minus figure. Our next entry is creditors. Again, we go to a balance sheet, this time on the creditors. 2015 creditors were €36,000, and in 2016 they were €45,000. So you can see creditors have increased from 36 to 45, so increase. Obviously creditors are people who we owe money to, so if our creditors increase, it's always a plus. Our next calculation is the net cash inflow from operating activities, and it came to €95,000. So that was calculated by just adding the figures above. So we move on to Part B. Part B is the cash flow statement of Barry Ltd for the year ended the 31st of 12th 2016. First heading is operating activities, and the first entry is net cash inflow from operating activities. So you can see here it is €95,000. And I got that from above. We just have to calculate that, so that was quite easy. Our next heading is return on investment and servicing of finance, and the first entry is interest paid. Okay, so we have to go to our profit and loss, and we look for interest paid. So our interest paid is €13,000. So the key word is paid. So if we paid our interest, it's obviously an outflow of cash leaving the business, so it's a minus. Our next heading is taxation, and the entry is tax paid. So again, we go to our balance sheet, 2015, and tax paid is €20,000. Again, it's a minus. The reason being we paid tax. It's an outflow of cash, money leaving the business. It's a minus. Our next heading is capital expenditure and financial investment. And the entry is the purchase of land or buildings. So we go to our balance sheet and we look under fixed assets. So you can see in 2015 it was €740,000. and in 2016 it was €880,000. Again, you can see it's an increase, so the business obviously purchased land and buildings, and the purchased land and buildings to the value of €140,000. So again, they made a purchase, an outflow of cash, money leaving the business, so it's a minus €140,000. Our next heading is equity dividends paid. So we go to our profit and loss extract, and in this question it is €8,000. So €8,000. Again, dividends paid, money leaving the business, it's an outflow of cash, so it's a minus figure. So our next calculation is the net cash inflow before liquid resources and financing, and you can see it's €86,000. So I got that figure by doing addition on all the figures above. Our next heading is financing. So we go to our balance sheet, and our first entry is the issue of ordinary share capital. Okay, so selling shares. So in 2015, 115,000 of shares sold. 2016 was 145,000. So difference between the two, 145 and 115, is 30,000. Now, so you can see that 30,000 is money coming into the business, so it's a plus. Our next is share premium. 2015 it was 6. And 2016 it was 25,000. So again, you can see there was an increase there. It's an increase of 19,000. Again, money coming into the business, so it's a plus, it's an inflow. Debentures, just highlight this again. In 2015 were €115,000, and in 2016, €145,000. So again, you can see the difference between the two, €30,000. Again, an extra €30,000 coming into the business. Again, it's coming into the business, so it's a plus. It's an inflow of cash, so it's a plus. So how did I calculate that €79,000? I just added these three figures here. Our next calculation is either an increase or decrease in cash, and this particular question is a decrease. The reason being, minus €86,000 plus €79,000 gives you a minus €7,000. Okay, part C, reconciliation of net cash flow to move into net debt. First entry, decrease in cash in the period, minus €7,000, and that is just what we calculated above. Debentures, you can see above were plus 30,000, but in our reconciliation here we reverse the sign or change the sign and becomes minus, so we just reverse the sign, minus €30,000. This calculation, change in net debt, was just the addition of the two above figures. Our next entry, net debt on the 1st of the 1st, 2016. So what we have to do here is we go to our first year, 2015, we look for debentures. So debentures here in the first year is €115,000, so €115,000. And what we have to do then is subtract any money that the business has in the bank or in the form of cash. So obviously, to find those figures, we have to go to our current assets. So we're going to go to current assets, we're going to look for bank or cash. So in our current assets, which you see here, we'll find bank. There's no cash in this particular question, and you can see it's €15,000. So what we have to do is subtract the debentures minus cash bank. So our debentures is €115,000. And we subtract the 15, which leaves us with that €100,000. And our very final calculation, our net debt on the 31st of 12, 2016, again, we just do an addition on the two figures above, which gives us a minus €137,000.